Yo, what's going on, guys? Welcome to the show. How's everybody doing? Today? I am sick as a dog today, guys, but I'm powering through to bring you this live because I love you. Let's get into it, guys. Let's have a look at what's going on with Bitcoin. Still inside of this bear flag. Has not broken out. We have broken above the 30-day moving average, which is currently at $92,034. Yeah. So, but we got to break out of this bear flag here if we want to see any progress to the upside. Like I said before, I am projecting eventually a move to fill the CME gap here at 96K, potentially a move up here to 102, which is where the 50-week moving average is right now. Probably reject off of that, and way down we go. Down we go. It's probably what we're looking at. All right, let's get into the chat a little bit. See what everybody's talking about today. We got 0 super chats again to start the stream. Holy smokes, guys! And there's not many people here today. Danny says we shall see. Guys, make sure you hit the like and subscribe. We have 100 people here. We have 23 likes. Those numbers aren't mathing, guys. Hit the like button. What do we got? Paul, good to see you, brother. Good to see you. It's me, Mario. What's up, brother? Senior Rob, blessings from the Honeycomb State. Don't let this bull fool you. Quentin, what's up, buddy? Good to see you, man. There she is, the one and only Gamma Goddess in the house. What's happening? Patience is key to success. Yes, it absolutely is. The people who are not patient just will not understand. They will get emotional. They will get frustrated. They'll get angry. They'll piss, they'll moan, they'll whine, they'll cry. They'll blame other people. And ultimately, they will lose because they didn't take the time to learn how to navigate this space properly. They ran out of patience hearing people constantly say, you have to be patient, right? So that's the funny thing about it. Everyone says that they can be patient when things are easy, but as soon as your patience actually starts getting tested, A lot of people fall by the wayside because they never had what it took to begin with, right? So just a little food for thought, guys. Just a little food for thought. You gotta be patient, or else you will not succeed in this space. People, I'm literally giving you the keys to the kingdom here. How did I succeed in this space over the years? And I've told you guys time and time and time again, how I succeeded over the years was really very simple. Patience and consistency. Only two things I needed to do. Be patient and be consistent. Leave my emotions at the door and not make decisions based on them. I didn't get online and start posting angry posts on other YouTube channels, comment section, blaming them for the market not going up or any of that stuff. No, I never hate posted online and stuff like that and fudded and whined and cried. You still don't see me do any of that stuff, right? So why are you doing it at the end, if you're one of the people who are? Let me ask you a simple question, right? If you're one of the people who's online and you're pointing fingers and you're upset and you're angry and you're toxic posting and all that stuff, let me ask you a quick question. How much money are you making doing that? I'm willing to bet that the answer is $0. So if it's not making you money, why are you pouring so much of your time, effort, and commitment to it? Doesn't make any sense, does it? When you hear it out loud, when you hear somebody say it out loud, you're probably sitting there going, well, I mean, when you say it like that, well, that's not the way I'm saying it. That's the way that it is, right? At the end of the day, if you're putting that much emotion and thought into something, you should be getting paid for it, right? And if you're not, then you're putting too much of your time, effort, and emotion and thought into it at the end of the day, right? Just a little food for thought. Attila dropping that cheddar says, thanks, brother, for everything you do. Made the life-changing promises you have been talking about. Feeling better. See you for our one-on-one on the 15th. Absolutely, brother. Absolutely. I got you, man. I got you. I love this family, man. I love this family. What else do we have? Attila also says, just bought 2 more Decent wallets. So easy to use. Thanks for everything. Yeah, guys, definitely. Decent wallet is a fantastic Christmas gift to anyone who's in crypto, guys. There's a 2-for-1 deal on them right now. We also have a Christmas deal going on. They just emailed me a new offer that I got to make a video on. So, guys, take advantage of your Decent wallet opportunities while the sale is going on. It also helps the channel, right? Jake the Snake says, pumping it to the Fed meeting, short-term bearish, in my opinion. Yeah, we could be pumping it. Yeah, this is probably a pump into the Fed meeting, but I'm a little shocked we're not moving up more aggressively towards the CME gap at 96,000. But we'll see. Dave, what's up, man? Good to see you, brother. Good to see you, man. Bruno says, good afternoon. What's happening? JM says, why can't Bitcoin just stay around here while ETH and alts take over? Because if it was like that, it'd be too easy, right? Another local, gracias for second scenario video on the Patreon. Hey, absolutely, no problem, man. No problem. Passenger says, told yesterday institutions are not going to permit a downside. They control nowcrypto.com, they control Now Crypto, not the retail for Prius. Yeah, but you know what? Liquidity's liquidity, my friend. The market will go down further at some point. It is inevitable. It's like Thanos. Blue says, thank you, Rob, for everything you do. Really helped my mindset. Minimum 4-year plan. There you go. Let's get it. Let's get it. Another local says, what a blessing to be able to raid panic sellers' bags. Yes, exactly. I love your mindset there. I love it. What's up, Rob? Still see hitting Miria similar prices as Gala. You know what? Listen, I do believe that the potential is there still. Yes. Right now, this second, no. Not this second. House, what's up, man? I'm telling you, this crypto is going. Darn base wallet isn't let you move anything. I can look at balances, but can't do a darn thing with it. Been very stressful. Oh, I wish I could help you there, House, but I don't use Base or my Coinbase a Coinbase wallet either. All my XCN is there staking. My heart is in my stomach. I have faith. Yeah, I seen that you were posting. I thought you said that you resolved that issue though. Another local says, hope people are listening to Rob. You've been warned. If you are emotional or lazy, you will sink. Patience and perseverance, family. Absolutely. Could be a buy the rumor, sell the news event. Yeah, we're probably pumping into the FOMC rate cut. Jake the Snake says, I agree, Roberto. Feels like a buy the rumor, sell the news event, potentially forming, allowing the bear flag to play out. Yes, exactly. What are your alt season chances for 2026? I think there's a very, very high chance closer to the tail end of the year. No time from Coinbase. Oh, no time frame from Coinbase. Jeez, that sucks, man. Can't wait for upcoming documentaries. Don't know how you find the time, but waiting to get more Jasmine. Hey, absolutely. Yeah, like I said, there was another big chunk of footage that got sent over to the editors last night. So, yeah, I don't know. I'm hoping within the next couple of days, but I don't want to give a solid timeline because, you want it done fast or you want it done right. You know what I'm saying? Plus, Hara's going to be watching the documentary series as well, and I want to put our best foot forward with that, right? Always trusting the process. Exactly. Holy smokes, guys. I am super, super sick. You have no idea. Hot and cold flashes and stuff. So let's get through the news here because I don't know how long I'm going to be able to hang on here. So, all right, let's get into Pompliano. He says, here is the case for a 50 basis point rate cut from the Fed tomorrow. Check it out.
All right, ladies and gentlemen, Jerome Powell, the big boss of finance, he and the Federal Open Market Committee, the FOMC, they start their two-day meeting later today, and the market has their eyes peeled. They're closely watching whether the Fed's going to cut interest rates or not. Now, polymarket odds, 25 basis points. The odds are at 95%. No change, 0% interest rate cut. That only sits at a 5% chance. So if the Fed, they cut rates, this will mark the third consecutive rate cut of the year. They did 50 basis points back in September. They did 25 basis points in October. Cut, cut, cut. That's what they've been doing. Now, this is supposed to serve as insurance against a deepening labor market, and this happens even as inflation remains sticky above the 2% target. But I want to lay out the argument for the Fed to do something different. I want to actually argue that they should make a 50 basis point cut tomorrow. So first, we know the labor market is softening. We see that the fears are rising that a broader slowdown or a recession could happen if we don't aggressively address the situation. Non-farm payrolls, they added only 119,000 jobs in September. It's a sharp deceleration from post-pandemic averages, and the report came in below economic expectations. So due to this deceleration, the unemployment rate has now ticked up to 4.4%. We've also seen layoff announcements surge to 1.17 million year to date. It's the highest level of layoff announcements we've seen since the 2020 pandemic. Now, simultaneous to that, hiring plans have reportedly hit their lowest level since the end of the great financial crisis. That's not good either. Lastly, private sector data. Well, those indicators like ADP jobs data or the Challenger layoff reports, they've weakened even more in the month of November. And these trends suggest that job growth is insufficient to match the labor force expansion. And so the case for a 50 basis point cut related to the labor market, it is crystal clear. A larger cut would bolster employment and it would prevent a vicious cycle of reduced spending, and it would increase hiring and not have hiring freezes. But the argument for a 50 basis point cut doesn't solely rely on the labor market. The government inflation metrics, which of course I believe to wildly overestimate inflation, those also provide support for our largest interest rate cut. Core PCE inflation is currently around 3%. It's about 1% over target. But disinflationary forces, those mitigate reacceleration risks. This should free the Fed up to focus on their dual mandate of employment goals. Now, critics will claim goods prices remain sticky due to tariffs and fiscal stimulus. Okay, critics. But falling crude oil prices, excess rental supply, and declining home prices, those all introduce deflation risks that give the green light for deeper cuts, in my opinion. On top of these converging forces, Fed projections and market implied inflation show that expectations are actually anchored closer to 2%. Now, this is obviously lower than the consumer surveys, which are projecting closer to 4%. But we know the surveys are corrupted. They're wrong. They're inaccurate. They're dumb. And it's likely further off that the surveys are wrong than the market consensus. Now, a 50 basis point cut would align the Fed's October statement committing to adjust policy as appropriate if risks emerge. So America's central bank could easily frame these larger cuts as targeted support rather than a policy pivot. So we have a weakening labor market, and we've got an inflation environment that is all conducive to a larger cut. But ultimately, this decision to cut more than 25 basis points, it still has to be made by humans that make up the FOMC. Thankfully, there's a few common sense folks that are sitting inside that building, and they seem to believe in the benefit of a larger cut. Now, we know the FOMC is unusually divided right now, and this could lay the foundation for a surprise aggressive cut. Governor Stephen Miron has recently dissented twice, both times in favor of 50 basis point cut. He argued in November that it's appropriate for a larger December cut to counter those labor risks. At the time, he said about the severity of the December cut, quote, at a minimum 25 basis points, but failing new information, 50 basis points is appropriate. Now, Miron isn't the only one. New York Fed President John Williams and San Francisco Fed President Mary Daly, they both have signaled support for looser monetary policy. Williams explicitly said that he views a cut as insurance against labor slippage, and he doesn't want to jeopardize inflation goals. So what exactly do the analysts think? All these big brains across Wall Street, what do they think is going to happen inside the Fed? Well, analysts at Nomura, they're forecasting a dovish dissent from Miron pushing for 50 basis points, but they also believe that others will have potential hawkish dissents, and they think that the hawks may even be against a 25 basis point cut. So this really highlights the unusual 60-40 split between committee members on easing policy. Now, this internal dynamic, which is rare because we have almost never seen opposite direction dissents over the last 35 years. These dissents could tip the balance toward bolder action or a more aggressive interest rate cut. But what do I think is going to happen? What are my expectations? Well, here, I really just think that we're going to get merely a 25 basis point cut. I wish it was 50 basis points. I just don't see the Fed building enough internal support to be that aggressive. The market dynamics warrant the larger cut. It's crystal clear to me. The economy would be better off with a larger cut. That's crystal clear as well. But unfortunately, the Fed plays it safe though. They're scared of seeing themselves in the mirror, let alone making a bold decision. A bunch of little scaredy cats run around that building. So now we all wait and see what happens. The Fed's going to conduct their FOMC meeting. Trillions of dollars is going to speculate on what one man, Jerome Powell, what's he going to say at the press conference tomorrow? In the world, it's going to keep spinning. The American economy is going to continue strengthening, and stocks are going to surge higher in the coming months. The Fed can't stop this train, regardless of how bad they are at managing monetary policy.
Here's what I think is going to happen. He's absolutely right. I think we are, in line for a 50 basis point cut. However, what I would say, another reason why the Fed will not cut 50 basis points is because there's only a 1% chance right now, which means it's not priced in. So one of two things will happen in terms of Jerome Powell's own words, when they don't like to surprise markets, right? And if there's only a 1% chance of a 50 basis point cut, if they cut 50 basis points unexpectedly, markets will respond in a violent and volatile way, one way or the other. Could be bearish, could be bullish, right? Markets could see this as a cause for panic and could crash markets. For the Fed moving too fast, people might think, oh, what does the Fed know that we don't know about the market? And, should we take our money out and sit on the sidelines? Or people would be very, very bullish and markets would pump aggressively. And in either scenario, the Fed does not like to impact markets, according to their own words, in that kind of a violent, volatile way. So in saying that, the Fed has announced many, many times they do not like to surprise markets, right? So that's why I don't see a 50 basis point cut coming tomorrow, just 25 most likely. And then in terms of Powell speaking, I think that he's going to crap all over the markets tomorrow as well. He's going to, just like he did last month, right? Look what happened in November, right? They gave us a 25 basis point rate cut, and then Powell came out bearish, made bearish statements, and crashed markets, right? Even though here we are, he implied we would not have a rate cut in December, and here we are getting a rate cut tomorrow, right? So I think he'll do something very, very similar. He'll crap all over the markets in his speech, crashing the markets. So I wouldn't be leverage trading in longs anyway tomorrow personally, but I don't know. That's just kind of my 2 cents on it. All right. Senator Lummis anticipates crypto market structure markup next week. Wyoming Senator Cynthia Lummis, a member of the U.S. Senate Banking Committee and one of the most prominent proponents of addressing digital asset market structure in Congress, said she wants to take the next step in advancing the bill sometime next week. Speaking at the Blockchain Association Policy Summit on Tuesday, Lummis said she anticipates that the markup hearing for the Responsible Financial Innovation Act, the Banking Committee's version of the market structure, would happen before Congress broke for the holidays. The senator said the crypto industry was getting a little concerned about the progress of the bill, adding that drafts were changed so much every few days during bipartisan discussions. Quote, our staffs are exhausted, Lummis said, referring to her and Senator Kristen Gillibrand's teams. I think that we're to the point where it's better to go ahead with the product and mark it up next week, and then give everybody a break over Christmas to catch their breath. The markup hearing involves lawmakers concerning amendments and changes before the bill is sent to Senate for a vote. Although the Banking Committee released a discussion draft of the market structure bill in July after the Digital Asset Market Clarity Act passed the U.S. House of Representatives, progress was slowed by the longest government shutdown in the country's history and reports of pushbacks from some lawmakers over DeFi provisions in the bill. A Monday report from Politico signaled that bipartisan negotiations over market structure were proceeding with plans for a markup in December. Lummis said in September that she expected the bill to be signed into law by 2026. However, it's unclear whether Republicans' timelines will pan out. Even if senators were to proceed with a markup, other obstacles such as bipartisan pushback could lengthen the time for the vote. So basically, Democrats could shove a wrench in the plans. Although the bill has yet to work its way through the Senate Banking Committee and Senate Agriculture Committee, many in the crypto industry have been championing Congress's efforts to advance the legislation, citing clarity and benefits to the market. More and more finance will move on chain under the leadership of the SEC's Paul Atkins once the market structure is passed into law by Congress, said Coinbase Chief Legal Officer Paul Grewal on Wednesday. Our leadership needs to align on the last details in the bill without delay. Although the final version of the bill to be considered by the U.S. Senate was not public at the time of publication, previously released drafts indicated that it would grant the Commodities Futures Trading Commission more authority over digital assets. This would basically over non-securities, right? Very, very bullish. Very, very bullish. Let's get back into the chat. Feel better, Rob, but don't work too hard. You do so much for the community, and we love you for it. Thank you so much. Thank you so much. Yeah, I am very, very sick today. Like all I want to do is go back to bed right now. So, Rob, if the real alternative season happens at the end of 2026, will it be, when will be, the next Bitcoin halving will still be the same as always. It won't affect when the Bitcoin halving is. Bitcoin halving event is based on how many Bitcoin have been mined in the time frame allotted, right? It has nothing to do with alts pumping later or whatever the case might be. So, Overcome, what's up, man? Rob, I'm torn. ZBEC is the only project I have that's in the green, and it's probably the most likely to break out. Don't know if I should look to sell. No one ever went broke taking profits, brother. Are you thinking this pump will only last a day or two? Yes, I am. I think it's a buy the rumor, sell the news event. We have I think Powell's going to dump the markets tomorrow in his speech. I think he's going to imply that we probably will not see a rate cut in January, dumping markets. Hey, Rob, will we see 1 cent Jasmy this month? I don't give timelines anymore because people freak out, right? People ask for my opinion on a timeline. I give my opinion on a timeline, and then they come back and they freak out and they get pissed off at me. So I don't give timelines anymore because people can't adult, right? Ditto, what's up, man? Get well soon, my friend. Thank you so much. Jamestown, thank you so much for the super chat. Thank you for the guy James and Attila. Thank you guys so much for the super chats. They've been so few and far between as of late. So the support means absolutely everything. Thank you so much for being thoughtful of me. Roberto is sick of your nonsense. Let's get over to Squawk Box and see what's happening over there. Former Cleveland president, I hope the Fed pauses for a while after the December cut. What's this nonsense?
More on this, we want to bring in former Cleveland Fed President Loretta Mester. She's a senior scholar at Princeton. She's an adjunct professor at UPenn's Wharton School and a CNBC contributor. And Loretta, let's talk about what Steve was just laying out. In his survey, 87% said they will cut, 45% said they should. Where do you come down on both of those questions?
So I think they definitely will cut. I mean, they signaled that quite clearly in President Williams' speech, New York Fed president, before the meeting. So I think they're going to follow through with that last cut. I do hope that they signal that, you know, they think the economy has gotten to a place where policy is in a good place and they are going to slow down the cuts, because I am more concerned about the inflation risk, the stickiness. But you know what gets attention are the things changing. And we've seen this weakening or softening in the jobs market. Yeah. So that gets the attention for a while. I do think we'll get weaker data because I think we're going to see government jobs in the new data being weak, because that's the end of the furlough or the delayed firing of the government employees. So again, we're going to see some weak reports on the labor market, but it's still in balance in terms of supply and demand.
You said this last cut, so you don't think they're going to be cutting again come January or beyond?
I hope they pause for a while and really assess where the economy is going. And I hope that at the press conference, we get a good sense of where they're seeing the economy going. I think this counting, dissents and then thinking about, well, do they have enough to cut again or not, doesn't really tell us how they're thinking about what the outlook for the economy is. And that should be driving their policy decisions.
It's interesting, though, that what you say, we pay attention to the thing that's changing the most, and the jobs picture is what's changing the most.
Right.
That's an argument for cutting.
No, it's not, in the sense of you really need to look at where inflation is. Inflation is not back to 2%.
Right.
So they're going to need to keep policy
I don't think it ever will be
somewhat restrictive if they are going to put downward pressure on inflation. And right now, inflation is pretty well above the goal. And it's not just all tariff driven. There's stickiness in the non-tariff affected parts of inflation. So they're getting very close to neutral. And in certain of the policymakers have said they think they're already at neutral. So continuing cutting is really moving policy into accommodation, not just moving it back to neutral or a little restrictive.
We've had some conversations around this morning. Mike Wilson was here. He's got a pretty strong outlook for the markets next year. I think he was saying 6,900 maybe, or 7,900 maybe, for where he expects the market to be next year at this time. But he said the biggest risk is inflation, that if inflation comes back and the Fed then decides to raise rates as a result of going after it, that is the biggest risk to continuing to see this. Do you think more than pause, the Fed should actually raise rates at some point to attack this inflationary problem?
So not at this point, because they have to balance both parts of the mandate. So we have seen the softening in the labor market, and they've taken out some insurance cuts. They'll do it again this week. And I think that's appropriate, but they cannot continue to do that and move policy into an accommodative stance, like blow through neutral. And then we will have an inflation problem because we won't have restrictive policy putting downward. So I think they're doing a good job of trying to balance those risks. But at some point, they're going to have to take on the fact that they need to have somewhat restrictive monetary policy if inflation is going to move back down to 2%. And even in their own forecast from September, it was going to take till 2028 to get back to 2%. So I think they see the problem. The question is, how do they execute policy so they remain at a good place to address potential risks manifesting themselves differently in the labor market than they're expecting, versus making sure that they're going to put policy in a place to get inflation back to 2%, because it's been above 2%,
It has.
right? Almost
has.
5 years, and that's a problem.
We have a lot of conversations we have today and every day about artificial intelligence, how corporations are incorporating AI into their businesses, and then kind of waiting for the efficiencies that come with that, the productivity efficiencies
Right.
that are expected to come with that. How do you measure that when you were at the Fed? How do they look at that?
So you have to take into account there's certain things in the economy that are maybe trending in a way, right? Productivity has been going up. So they're going to take that on board and say, okay, we're not certain about it, but we have to forecast that we think that we're going to get productivity gains. That's what I want to hear from the Fed. How are they thinking about that? How are they building that into their forecast for the economy? And then once we kind of have a view of their outlook and the risks around that, we can then assess, okay, is the data coming in and telling us that their outlook is right? Or is the data coming in and saying, you know, we have this part of it wrong, they're going to have to adjust that. And that's what if you're doing forecasting, that's the proper way to do it. You have an idea of where the economy may be going. There's risks around that, of course. You have some alternative scenarios that you think maybe manifest themselves. And then you're ready to adjust policy if it turns out the data is not coming in as you expect, consistent with your forecast.
How do you even trust the data when it's so far behind at this point, and a lot of questions about how accurate some of the data is?
Well, you know, the Fed does an excellent job through its reserve banks of collecting really real-time information from businesses, from labor market representatives, right, from consumers and community representatives, and they do their own surveys. So there's a lot of really good, I think, information out there. And it's a mass amalgam of all that data and all that information that informs your outlook for the economy and informs monetary policy.
I agree. The Fed's job, I mean, a lot of people, including myself, talk about the Fed's job like it's easy or something, and it can't be easy to balance unemployment and inflation the way that they're trying to do. But, I mean, like I said, inflation numbers came in the other day, and they were cooling again, right? Will we ever get inflation back down to 2%? I don't know. Maybe, probably not, right? So to have this target that we probably won't hit, I don't know. What's up, Rob? Been busy making money in the real world. Hope y'all been trading this up. Yes, the trading group. I've been dropping tons of trades over in our trading group, and we have been absolutely crushing it over there, brother. Was wondering where you were at. The Fed being reactive is why they are always wrong. Yes, exactly. Delayed reactions, right? Delayed reactions. Absolutely. Absolutely, man. Well, still inside this bear flag, guys. This is my target anticipation. We come down, we double bottom here, then we come up, we put in the right shoulder, and then we are gone down into a bear market. So probably won't be a very long one, but bear's gone to winter hibernation yet. Safe to come out. Good to see you again. Good to see you, man. All right, guys, I need to go lay down. I am very, very sick. I'm sweating. I'll try to do another live tonight at 8 p.m., but we'll see how I'm feeling, okay? I'll see you guys a little bit later. Get over to the Patreon. Join our trading group. We are dropping 4 trades a day over there, guys, and we have been crushing it. Even when the market is red, we have been making money. Get over there. It is 50% off right now. The link is in the chat. It's in the pinned comments, guys. Take advantage of it before the offer is over. It is only a one-time a year annual Christmas deal that we put out there, guys. I'm going to put it in the chat right now for you. So get over there. Again, use the promo code, 50% off. Lock it in, guys. Click like if you like this video. Click subscribe if you really liked it. I'll see you guys in the next one. God bless.